Hi, this is Todd Baker, and today I want to talk to you about what it means to be pre-qualified, and we'll talk a little bit about the difference between pre-qualification and pre-approval, or what we do, which is pre-underwriting your loan. This is the process that most borrowers go through when they initially start shopping for a mortgage. They want to get pre-qualified, and that's what you're told to do. You're going to be told by your realtor, hey, I need a loan approval letter. And so what people do, and many times they'll refer you, in fact, if we've probably met through a realtor or through a friend. So usually people find their lenders through their friends or through their real estate agents, but many people also go online, they go to a big bank, they go to their local bank or wherever. But the process starts with pre-qualification. And what that looks like is this. The first step is you will complete a loan application. This is typically done online, although it can be done over the phone. We do ours both ways. We prefer online just because it's easier, but we can do it over the phone if it's more convenient for you. But once it's complete, we're going to do a credit report analysis. And what that looks like is this. The first thing that we look at is scores. Scores will determine, first off, at the very basic, can you or can you not get a residential mortgage based on your credit score? And then if it's yes, and typically it's 600 or above. There's some programs that go to 580, but typically you can count on a minimum score of 600. Okay, and then depending on where the score is, it could be an FHA credit profile, it could be a conventional loan profile, and then if you're a veteran, if you have a 620, you can qualify for a VA loan, or if you're in a rural area and you have the right level of income, you can qualify for a USDA loan, also 620. So those are the basically minimum score thresholds. But right here is where most banks stop. So if you go to a big bank, this is usually all they do. You can generate a pre-approval letter, they'll send you an automated one, you'll feel pretty good. They'll even generate what your payment looks like, what your cash to close looks like. But then what happens is about half of those loans fall out because they haven't really done anything more than just a precursory analysis. I call it a stated income loan because if this is the only analysis that's done, you're on really weak ground and you could be very hugely disappointed and not be able to buy a property because the rest of this doesn't look like. So what we do is we then look at the history, and we're looking for a few things. We want to look for, number one, significant derogatory events. That includes a bankruptcy or a foreclosure or a judgment. Particularly bankruptcy, foreclosure, short sale, those kind of things will result in certain waiting periods depending on the kind of loan program we're looking to qualify for. And so we want to right away see if there are those impediments and determine what those waiting periods are so that we know how to proceed. The next thing is, in your history, if you have deferred student loans, there's certain payments that still have to be, there's certain minimum payments that still have to be counted in your debt ratio. So we have to look for that. FHA, for example, on collection accounts, certain collection accounts, we have to add in a minimum payment back into your debt ratio. So this has to be done correctly to determine your actual qualifying liabilities. Next step is the loan application itself is reviewed. And it's reviewed for, we need 2-year employment history, 2-year residence history. We're going to look at whatever assets you put in there, and then I'll start to help determine what kind of cash you have for down payment and closing costs. So what kind of loan program in conjunction with these scores that would work best for you. And then also what we want to determine is we want to figure out, okay, what kind of documentation are we going to need? Because the key to this whole process is to generate a document list, right? So we call it a homework list. Some loan officers call it a needs list. But what it looks like, and I'm going to have another video going out to you guys about what's in the homework list and how to get those documents. But it's things like W-2s and pay stubs and bank statements and an ID and what you'll need in order to qualify. So the pre-qualification process is simply a credit report analysis, a loan application analysis, and generating a needs list. What we do is we also generate an initial mortgage plan. So I start to lay the groundwork for here's the programs you can qualify for. Here's the lowest cost program. I do a side-by-side comparison. I show you cost over 5 years and 15, and we start to lay a groundwork for actually building a mortgage plan that's going to create wealth for you. And then we follow up by getting this needs list. So that's the pre-qualification in a nutshell. I hope you found that helpful, and I hope you have a wonderful day today.